Chapter 3 discussions will cover information on the reports issued by auditors. At the end of Chapter 3, you should be able to do the following. You should be able to describe the parts of the standard unmodified opinion audit report for non-public entities under the American Institute of Certified Public Accountant Auditing Standards. You should be able to specify the conditions required to issue the standard unmodified opinion audit report. You should be able to understand reporting on financial statements and internal control under the Public Company Accounting Oversight Board auditing standards. And you should be able to describe the 5 circumstances when an emphasis of matter, explanatory paragraph, or a non-standard wording is appropriate to include in an unmodified opinion audit report. In addition, by the end of Chapter 3, you should also be able to identify the types of audit reports that can be issued when an unmodified opinion is not justified. You should be able to explain how materiality affects audit reporting decisions. You should be able to draft and appropriately a modified opinion audit report under a variety of circumstances. You should be able to determine the appropriate audit report for a given audit situation. And lastly, be able to understand the use of international accounting and auditing standards by U.S. companies. So, what are the parts of the standard unmodified opinion audit report for non-public entities under the American Institute of Certified Public Accountant Auditing Standards? The standard unmodified opinion audit report is made up of 8 important sections. The first section is the report title, followed by the audit report address, then the introductory paragraph, a statement on management's responsibility, followed by a statement on the auditor's responsibility, and the most important section, which is the auditor's opinion paragraph, and a section where the CPA signature and the address of the CPA firm who performed the audit is shown on the audit report. And lastly is the audit report date for the audit. In here, we have an example of a standard unmodified opinion audit report. Figure 3-1 illustrates the 8 important sections of the audit report. Let us begin with the report title. Auditing standards require that the auditor's report title include the word independent. And in this particular example, we could see that the report title as Independent Auditor's Report. Followed by the title is the audit report address. The report is usually addressed to those for whom the report is prepared for or the intended user of it. In this particular example, the report is addressed to the board of directors and the entity's shareholders who are the intended user or for whom the report is prepared for. Followed by the audit report address is the next important section of the auditor's report, which is the first paragraph of the auditor's report. The first paragraph, or the introductory paragraph, indicates that the certified public accountant has performed an audit. It also provides information on the financial statement that was audited and the accounting periods covered for the audit. Followed by the first paragraph is the next section of the auditor's report, which is the statement on management's responsibility. The audit report must include the heading management responsibility for the financial statement and a paragraph that describes management's responsibility for the financial statement, which includes selecting the appropriate accounting principles and management's responsibility in maintaining internal control over financial reporting. Followed by the management responsibility paragraph is the auditor's responsibility statement. A statement on auditor's responsibility includes a paragraph that describes the auditor's role and responsibility in terms of the expression of an opinion on the financial statement. It also includes a statement that the auditor performed the audit according to the auditing standards accepted in the United States, and a statement that the audit is designed to obtain reasonable assurance about whether the financial statements are free of material misstatement. The scope paragraph is also included under the auditor's responsibility section of the report. This paragraph describes the scope of the audit, the evidence accumulated, the assessment of the risk of material misstatement in the financial statement, the auditor's consideration of the internal control relevant to the financial statement, and lastly, the evaluation of the appropriateness of the accounting policies selected, as well as the reasonableness of accounting estimates and the overall financial statement presentation. The most important part of the audit report is the section for the auditor's opinion. This part of the report states the auditor's opinion and conclusion based on the results of the audit. This part is so important that often the entire audit report is referred to simply as the auditor's opinion. In the next section of the audit report, we could see that this section includes the CPA signature and address. The Certified Public Accountant signature and CPA firm address section identifies the CPA firm or practitioner who performed the audit. In this section, the city and state of the audit firm should also be indicated. And lastly, the last section of the audit report is the audit report date section. The audit report section date identifies the date on which the auditor completed the auditing procedures to obtain sufficient appropriate evidence. And this date is important to users because it indicates the last day of the auditor's responsibility for the review of significant events that occurred after the date of the financial statements. This is a good example of a standard unmodified opinion audit report having all of the 8 important sections of the auditor's report. So if you do want to go over this example again after the video or course presentation, you can find figure 3-1 on page 48 of your textbook. We've touched on the discussions related to the standard unmodified opinion audit report, as well as a discussion on the 8 important sections of the auditor's report. Moving on, we're going to talk about the conditions required to issue the standard unmodified opinion audit report. The first condition required to issue the standard unmodified opinion audit report is that all statements such as the balance sheet, income statement, the statement of changes in stockholders' equity, and the statement of cash flows should be included in the financial statement. The second condition is that there should be sufficient appropriate evidence that has been accumulated in relation to the audit. Followed by that is the condition that the financial statements are presented fairly in accordance with generally accepted accounting principle or another framework applicable to the financial statements. And lastly, the condition that there are no circumstances requiring the addition of an emphasis of matter paragraph or a modification of the wording or auditor's opinion in the report. In the preceding slides, we talked about the reporting related to non-public entities under the American Institute of Certified Public Accountant Auditing Standards. In here, we are moving on in terms of the discussion related to reporting on financial statements and internal control for public companies under the Public Company Accounting Oversight Board auditing standards. There are two significant audit reporting differences for public companies in contrast to non-public entities under the Public Company Accounting Oversight Board auditing standards. First, the standard unmodified opinion audit report is different. The difference is going to be in detail in figure 3-3, which will be shown on the next slide. And the second difference in terms for the audit reporting for publicly held companies is that auditors of larger public companies must also issue an opinion on internal control over financial reporting. In here, we have an example of the standard unmodified opinion audit report for a public company under the Public Company Accounting Oversight Board auditing standards. In contrast to non-public entities, for public companies, the auditor's report includes 3 paragraphs: the introductory paragraph, the scope paragraph, and the opinion paragraph. The introductory paragraph includes the statement on management responsibility as well as the auditor's responsibility. This information is similar to the first 3 paragraphs of the auditor's report for non-public entities, except for public companies, the statement on management's responsibility as well as the auditor's responsibility are both included in the introductory paragraph. Next is the scope paragraph. The scope paragraph notes that the auditing is done on a task basis. In addition, the scope paragraph is is similar to the second paragraph under the auditor's responsibility of the report for non-public entities. And lastly, the third paragraph of the audit report for a public company is the auditor's opinion paragraph, which is basically similar to the opinion paragraph of the report for non-public entities. As you could see that there is a difference in terms of the audit report between a public company versus a non-public entity, wherein previously we discussed there are 8 important sections for the audit report for a non-public entity under the American Institute of Certified Public Accountant Auditing Standards. Under the Public Company Accounting Oversight Board Auditing Standards for publicly held companies, there are 3 important sections, which is the introductory paragraph, the scope paragraph, and the opinion paragraph. Section 404B of the Sarbanes-Oxley Act requires the auditor of a publicly held company to report on the effectiveness of internal control over financial reporting. Public Company Accounting Oversight Board Auditing Standard 5 requires the audit of internal control to be integrated with the audit of financial statements. However, the auditor may issue separate reports, such as the separate report on internal control over financial reporting, or the auditor may combine both reports. While the combined report is permitted, the separate reporting on internal control over financial reporting is more commonly done in practice. This section discussion involves the second difference between the reporting, or the difference between the auditor's report in terms of the non-public entities versus a publicly held company under the Public Company Accounting Oversight Board Auditing Standards. In here, we have an example of the separate reporting on internal control over financial reporting for a public company under the Public Company Accounting Oversight Board standards. The following elements are included in this type of reporting: a title that includes the word independent, an introductory and opinion paragraph that refers to the framework used to evaluate internal control and that the audit was conducted in accordance with Public Company Accounting Oversight Board standards. In addition, the introductory paragraph highlights management's responsibility for and separate report that contains management's assessment of internal control over financial reporting. This type of report also includes a paragraph after the scope paragraph defining internal control over financial reporting. The additional paragraph before the opinion, this paragraph addresses the inherent limitations of internal control. And the last paragraph of the report includes a cross-reference to the auditor's separate report on the financial statement. The separate report on this example is an unmodified opinion on the effectiveness of internal control over financial reporting. Do keep in mind that the auditor may issue a qualified opinion, an adverse opinion, or even a disclaimer of opinion on the operating effectiveness of internal control over financial reporting. conditions that require the auditor to issue a report other than an unmodified opinion will be discussed in Chapter 12. If you do want to go over this example again after the video presentation, you can find Figure 3-4 on page 53 of your textbook. So far, we have discussed about the unmodified opinion audit report without any additional paragraph or non-standard wording included to the auditor's report. In the next discussion, we are going to move on to an unmodified opinion audit report wherein an emphasis of matter, explanatory paragraph, or a non-standard wording is included. In this particular case, we would like to identify what would be the circumstances wherein an additional paragraph would be appropriate in the inclusion of an unmodified opinion audit report. The unmodified opinion audit report with an additional paragraph, which is an emphasis of matter, explanatory paragraph, or a non-standard report wording, is used when it meets the criteria of a complete audit with satisfactory results and financial statements that are fairly presented, but in this particular case, the auditor wants to draw the reader's attention to certain matters, or the auditor is required to provide additional information. And given that, the unmodified opinion audit report will then have an emphasis of matter, explanatory paragraph, or a non-standard report wording. The most important causes of the addition of an emphasis of matter paragraph or a modification of wording under both the American Institute of Certified Public Accountant and the Public Company Accounting Oversight Board audit standards are the following. There is lack of consistent application of generally accepted accounting principles. There is substantial doubt about the entity's going concern. The auditor agrees with the departure from promulgated accounting principles. The emphasis of other matters is needed and required as determined by the auditor. And lastly, the auditor uses the reports of other auditors. In here we have two examples where an emphasis of matter paragraph or an explanatory paragraph is used to explain a change in accounting principle and a circumstance in which there is substantial doubt about an entity's going concern. Under Figure 3-5 is an example where an emphasis of matter paragraph or an explanatory paragraph is used due to a change in accounting principle. Auditing standards require the auditor to call attention to circumstances in which accounting principles have not been consistently observed and the impact of the change in the accounting principle to be adequately disclosed. When a material change in accounting principle occurs, the auditor should add an explanatory paragraph after the opinion paragraph that discusses the nature of the change and points the reader to the footnote that discusses the change in accounting principle. Under figure 3-6 is an example where an explanatory paragraph is used because of substantial doubt about going concern. The auditor has a responsibility under auditing standards to evaluate whether the company is likely to continue as a going concern. When the auditor concludes that there is substantial doubt that a client may not be able to continue its operations, or the client is unable to meet its obligations for a reasonable period, then the auditor must issue an unmodified opinion audit report with an explanatory paragraph. This type of report is required regardless of the disclosures in the financial statements if there is substantial doubt that the client has the ability or there is doubt about its going concern. If you want to go over these two examples again after the video or course presentation, you can find figure 3-5 on page 55 and figure 3-6 on page 56 of your textbook. In certain circumstances, the auditor may want to emphasize specific matters regarding the financial statements, even though the auditor intends to express an unmodified opinion. In such cases, an explanatory paragraph is included in the audit report. Examples of emphasis of other matters that would be included in explanatory paragraph would be the following. The existence of material related party transactions, important events occurring subsequent to the balance sheet date, the description of accounting matters affecting the comparability of the financial statements with those of the prior year, material uncertainties disclosed in the footnotes such as unusually important litigation or regulatory action, and lastly, a major catastrophe that has had or continues to have a significant effect on the entity's financial position. We have so far talked a lot more on the auditor's unmodified opinion report. In the next few slides, we are going to move on and discuss about the other types of audit reports when an auditor is required to modify the audit opinion. There are three conditions requiring a modification to the audit opinion. The first condition is if the scope of the audit has been restricted, or what is known as a scope limitation. The second condition requiring a modification to the audit opinion would be if the financial statements have not been prepared in accordance with generally accepted accounting principles, or what we know as GAAP departure. And lastly, if the auditor is not independent, then a modification to the audit opinion is required. If any of the three conditions requiring a modification to the audit opinion exists, there are three types of reports in which the auditor may use. The first type of audit report is the qualified opinion audit report. Under this report, the auditor can use this when a scope limitation or departure from generally accepted accounting principle is observed by the auditor. but only when the auditor concludes that the overall financial statements are fairly stated. The second type of report that the auditor can use is the adverse opinion audit report. This report is used when financial statements are so materially misstated or misleading that they do not present fairly the financial position of the entity. However, this condition is uncommon, and thus the adverse opinion report is rarely used in practice. And lastly, the third type of report is the disclaimer of opinion audit report. This report is used when the auditor cannot form an opinion on the financial statement due to a severe scope limitation, a lack of knowledge on the part of the auditor, or if the auditor is not independent. In here, we have an illustration of the different types of audit reports issued by an auditor. We have discussed these types of audit reports in detail in the previous slides. This illustration provides a good summary of the conditions that require modification to the audit opinion and the appropriate type of audit report the auditor would use. To recap and to do a summary of what we have just discussed, the standard unmodified opinion report is the report used when all statements such as the balance sheet, the income statement, the statement of changes in shareholders' equity, the statement of cash flows are included in the financial statement, as well as when sufficient appropriate evidence has been accumulated by the auditor, and when the financial statements are presented fairly in accordance with generally accepted accounting principle or other applicable framework, and lastly, if there are no circumstances requiring the addition of an emphasis on matter paragraph or modification of the wording or auditor's opinion in the report. Likewise, if a complete audit took place with satisfactory results and the financial statements are fairly presented, but the auditor concludes that important additional information is required to be disclosed, then the auditor must issue an unmodified opinion with an emphasis on matter explanatory paragraph audit report, as this would be the appropriate report to use in such cases. On the other hand, if the auditor concludes that the overall financial statements are fairly presented, but there is a scope limitation or a departure from generally accepted accounting principles, then the qualified opinion report is the report that the auditor should issue for the audit. In addition, if the auditor concludes that the financial statements are not fairly presented, then the auditor must issue an adverse opinion report. When an auditor is unable to form an opinion on the fair presentation of the financial statement, or the auditor is not independent, the auditor will need to issue a disclaimer audit report. Figure 3-2 is a good illustration and summary of the different types of audit report that we have discussed. So if you want to go over this illustration after the video or course presentation, you can find figure 3-2 on page 51 of your textbook. In terms of audit reporting, there are significant decisions that an auditor makes during the audit planning and the performance of the auditing. One of those significant decisions is the materiality involved when performing an audit. Materiality as it applies to accounting and auditing is described as a misstatement in the financial statements that can be considered material if knowledge of the misstatement will affect a decision of a reasonable user of the financial statements. There are three levels of materiality that is used in considering the type of opinion that an auditor may issue. If the amounts related to the audit are immaterial, then a standard unmodified opinion audit report is appropriate for the auditor to issue. On the other hand, if the amounts are material but it does not overshadow the financial statement as a whole, a qualified opinion using an exempt 4 is appropriate. But if the amounts related to the audit are so material or so pervasive that the overall fairness of the financial statement is in question, then the auditor should issue a disclaimer or an adverse opinion audit report. In here, we see the relationship of materiality to the type of opinion the auditor will issue will depend on the impact of the information on the user's decision if the user were to use the information. For example, if the user's decisions are unlikely to be affected due to the immateriality of the information, then the auditor can issue an unmodified opinion report. Likewise, if the information in question affects specific decisions of the user, but the effect of the financial misstatements is not pervasive to the financial statements and the overall financial statements are presented fairly, then the auditor can issue a qualified opinion report. However, if the user's decisions, which will be based on the financial statement, is significantly affected and the effect of the misstatements on the financial statement is so pervasive, then the auditor must either issue a disclaimer or an adverse opinion audit report. The auditor's decisions regarding materiality is based on the following conditions. Materiality decisions due to the client's failure to follow generally accepted accounting principle will impact the auditor's decision regarding materiality. The primary concern in measuring materiality when a client has failed to follow generally accepted accounting principle is usually the total dollar amount of misstatements in the accounts involved when compared with a benchmark or base. Likewise, the next condition would be when the dollar amount of misstatements cannot be accurately measured for the audit. In addition, when the decision of the user of the financial statement may also be affected by the nature of the misstatement contained in the financial statements or accounts being examined by the auditor. And lastly, when there is a scope limitation in an audit, this condition will impact the materiality decisions of the auditor. The conditions that we just mentioned will affect the auditor's decision related to materiality, and in turn it will affect the type of audit report in which the auditor will issue in relation to the audit. There are various conditions in which will require the auditor to modify his or her opinion when issuing a report related to an audit. Modifications of the audit opinion can arise due to the auditor's scope being restricted by the client or by conditions beyond the control of either the client or the auditor. A scope restriction can lead to a qualified report or a disclaimer of opinion, depending on the facts in the situation. A modification of the audit opinion can also arise due to the financial statements not being in conformity with generally accepted accounting principle. A departure from a generally accepted accounting principle may result in a qualified report or an adverse opinion depending on the facts of the situation or the audit engagement. In here, we have an example of a qualified report due to a scope restriction. The basis for qualified opinion paragraph provides the information for the modification of the opinion and a description of the scope limitation, which in this case was the lack of access to the financial information, which prevented the auditor from performing the procedures required for the audit. If you want to go over this illustration after the video or course presentation, you can find figure 3-8 on page 64 of your textbook. In here, we have an example of a disclaimer of opinion due to a scope restriction. The basis for disclaimer opinion paragraph is similar to the wording seen in the qualified report that we just discussed in figure 3-8 on the previous slide. But on a disclaimer of opinion report, in contrast to the qualified report, is that the auditor does not express any opinion on the financial statement. If you want to go over this example after the video or course presentation, you can find figure 3-9 on page 64 of your textbook. In figure 3-8, we saw an example of a qualified report due to a scope restriction or a scope limitation. In here, we have an example of a qualified report, but it's due to a departure from generally accepted accounting principle. The basis for qualified opinion paragraph provides the information for the modification of the opinion and a description of the departure from generally accepted accounting principle by the client. If you would want to go over this example again after the video or course presentation, you can find figure 3-10 on page 65 of your textbook. In here, we have an example of an adverse opinion report due to a departure from generally accepted accounting principle. Although the condition with the adverse opinion report is similar to the qualified report that we've seen in the example on figure 3-10 in the previous slide, the opinion expressed under the adverse opinion report is different from the qualified report. The basis for adverse opinion paragraph provides the information for the modification of the opinion and a description of the departure to generally accepted accounting principle by the client. On an adverse opinion report, the auditor expresses an opinion that the financial statements are not presented fairly. And this is where the difference between a qualified report and the adverse opinion report could be seen, is the expression on the auditor that the financial statements are not presented fairly. If you want to go over this example after the video or course presentation, you can find figure 3-11 on page 65 of your textbook. In here, we have an example of a disclaimer of opinion due to the auditor's lack of independence. If the auditor is not independent as specified by the American Institute of Certified Public Accountant Code of Professional Conduct, a disclaimer of opinion is required even though necessary audit procedures were performed by the auditor. With a disclaimer of opinion, the auditor does not express an opinion on the financial statements of the client. And if you want to go over this example after the video or course presentation, you can find figure 3-12 on page 66 of your textbook. How does the auditor decide which audit report is appropriate for a given audit situation? In the next few slides, we are going to discuss about the audit process in which the auditor uses to decide when they are faced with a given situation and they have to decide on what type of audit report would be appropriate for that situation. Auditors have a well-defined process for deciding the appropriate audit report for a given audit situation. The auditor must first determine whether any condition exists that requires a departure from a standard unmodified opinion report. The auditors identify these conditions as they perform the audit, and identified conditions are then included in the audit file as discussion items for audit reporting. The next process is the decision regarding materiality for each condition. This is followed by the auditor's decision on the type of report that will be appropriate for the condition given the materiality level. After making the decision on the type of report, the auditor must then write the audit report. Most certified public accounting firms have computer templates to help the auditor write the auditor's report, and also sometimes accounting firms or certified public firms have partners who are expert in report writing. There may be situations where auditors may encounter more than one condition requiring a departure or modification to the standard reporting. In these situations, the auditor should modify the opinion for each condition. In here, we have a summary of the conditions requiring a departure from a standard unmodified opinion report. Since we have discussed these conditions in a lot more detail in the previous slides during the course presentation, I have decided not to talk about table 3-2. But you can find table 3-2 on page 67 of your textbook if you would want to go over the table again after the video or course presentation. Moving on, in the next slide, we are going to discuss the use of the international accounting and auditing standards in professional services provided by auditors. Currently, U.S. public companies are required to prepare financial statements that are filed with the Securities Exchange Commission in accordance with U.S. Generally Accepted Accounting Principle. An auditor may be engaged to report on financial statements prepared in accordance with international financial reporting standards. In those kinds of situations and cases, the auditor refers to the international financial reporting standards rather than the U.S. Generally Accepted Accounting Principle in the auditor's report. We have reached the end of Chapter 3 discussions. Chapter 3 covered the auditor's report, the 4 categories of audit reports, and the auditor's decision process in choosing the appropriate report for an audit. Please complete the required evaluation method for Chapter 3 as it will be included in your final grade. Homework and quiz are expected to be submitted on the specified due date. Please use Blackboard and Pearson's MyLab, also called My Accounting Lab, to complete your homework and quiz. You have reached the end of the course presentation for Chapter 3. Please access the video for Chapter 4 for the next presentation of the course.